The U.S. CPI data released today showed this month's index higher than expected. Prices rose due to higher costs for energy goods, medical care, and food. The U.S. CPI for all items came in higher than last year, while core items ex-food and energy saw a modest increase. The price increase was more than anticipated, with core prices seeing a stronger gain than forecasted. The main drivers for the CPI increase were energy goods, medical care, and food. Gasoline prices spiked significantly, though the rest of the energy sector fared better than expected. The medical care subindex had the largest rise from the previous month, making a strong showing. The food subindex also showed an impressive increase from last month, though the overall impact on the index was smaller. Prices for housing, transportation, apparel, entertainment, and alcoholic beverages saw more modest increases. Services costs were about as expected, with education and communication slightly below what was forecasted. Rent and tuition fees both experienced smaller price gains from last month. Owner's equivalent rent had a slight rise as well, though rent of primary residence saw a larger increase than the same month last year. Transportation prices saw a boost in airfare, motor vehicle maintenance, and motor vehicle parts and accessories, contributing to the overall hike. Apparel prices saw mostly flat growth, while entertainment prices moved in the expected direction. Alcoholic beverages saw a mild increase, while tobacco and smoking products stayed the same from last month. Overall, today's CPI data released showed a much larger increase than the preceding month, with strong gains from medical care and energy goods. Prices for food, housing costs, apparel, travel, and entertainment all had positive change, driving the index higher. Education prices and services costs were less than what was previously predicted, while rent and tuition saw weak gain. Gasoline prices had the strongest increase, surpassing predictions for the category, highlighting the landscape of the index overall. The jump in CPI signals a continuing pattern of inflation in the U.S. economy, largely due to the gains in energy prices. With the CPI now closer to the Federal Reserve's target rate, an interest rate increase could be in sight. The increase in all items and core prices represent a level of price stability, though it could be short-lived. Higher energy costs tend to be volatile and the prices could decrease in the near future, as seen in the past. The medical care sector has seen sustained activity and should remain a major focus for the CPI in the coming months. Food prices may grow due to the impending harvest season, while travel could be slowed if gasoline prices decrease. Apparel and entertainment costs could remain relatively flat, while rent and tuition prices should be monitored as potential drivers for the index.